Hi guys, today we'll be discussing Sea Limited, a hyper-growth stock in Southeast Asia. Its current price was $192 at the close of the market on 7th January. I'm recommending an entry position at $170, representing a discount of 11% from the current price. Recently, growth stocks have sold off significantly, and Sea is just one of them. While this has created lots of volatility in the market, I think it represents excellent buying opportunities in my opinion. So let's take a look at Sea. Sea is a company with three main operating segments. As of its latest quarterly filings on the third quarter of 2021, its e-commerce segment, which is Shopee, contributed around 54% of revenues. Its gaming arm, Garena, contributed around 41%, and its most newly established segment called Sea Money, which operates digital financial services, contributed 5%. As you can see on this slide, the share price has tumbled significantly from its highs at $372. This was due to a few reasons. Firstly, there were the impending rate hikes from the Fed and therefore the de-risking of growth stocks from investors' portfolios. Tencent's move to trim shares in Sea. Tencent was one of Sea's large investors, and also the potential of waning revenues from gaming. So does this finally represent an opportunity to get into this high-flying stock? I've came up with a few investment theses, a few key risks, and how we'll be valuing the business. So for my first investment thesis, firstly, I think that there's strong track record in execution for e-commerce in Southeast Asia, and the likely scenario that will play out over the next few years is a duopoly with Lazada. The second investment thesis is that gaming represents a strong and profitable segment, and even though there are concerns over concentration risks in its largest game, Free Fire, its popularity still remains fairly stable now, and I believe there could be upside potential if a new game is released. And the last thesis would be that new growth areas such as Sea Money, which is the digital financial services arm, could provide an ecosystem effect for the entire company. So in terms of key risks, I've identified four of them. The first would be the high concentration in gaming revenues, and therefore investors would be concerned if there was losing interest in Free Fire. Second would be e-commerce players having intensifying competition and therefore leading to more cash burn. The third would be regulatory risk, as Sea operates in currently a few markets in Southeast Asia. And the last one would be rate hikes could prompt more selling pressure on pre-profit stocks. And how I'll be valuing the business is gaming segment will be valued based on EV over EBITDA, e-commerce segment will be valued based on EV over sales, and there'll be no value ascribed to the fintech segment, and this is partially explained by the fact that the segment is still currently loss-making. So let's take a look at our first thesis, which is Shopee. On a broad picture perspective, COVID-19 has really accelerated e-commerce adoption here in Southeast Asia, condensing years of progress into months. As you can see, there was 290 pre-pandemic consumers, 40 million were added in 2020, another 20 million were added in the first half of 2021, representing a total growth of consumers of 20%. And adoption is not just a transient scene. Over 95% of new e-commerce users in 2020 said that they will continue using the service in 2021. But the question is, has growth prospects dramatically moderated? This is one of the factors that have contributed in a dramatic fall in stock price for Sea Limited, which is the expected slowing growth of the e-commerce scene post-pandemic. According to a report by Temasek, Bain & Co. and Google, they are expecting a decrease to 18% CAGR from 2021 to 2025, which is a sharp fall from the year-on-year growth of 62% from 2020 to 2021. Let's take a look at Shopee's unit economics. Even though GMV growth is slowing down and the take rate, which is denominated by revenue divided by GMV, has increased significantly. While S&M costs, which are sales and marketing costs, which are a big part of the whole e-commerce business, have somewhat remained constant as a percentage of GMV, indicating that Shopee is on the right track to achieving profitability. And I think the likely scenario is that Shopee will form a duopoly with Lazada in Southeast Asia over the next few years. Credit Suisse has shown that Shopee has increased market share in all key markets in 2021. For example, in Thailand, according to a report by UBS, it has become a duopoly with Lazada and Shopee, evident by the concentrated usage between them amongst the merchants, with a significant gap with the third player, which is JD Central. Now that we have covered Shopee, let's move on to Garena. At Garena, we are seeing a slight deceleration in unit economics. Quarterly paying user growth have slowed down, while pay ratio, which is quarterly paying users divided by quarterly active users, also remains flat. The company recorded 729 million users in the third quarter of 2021, which is almost flat from the 725 million recorded in the quarter 2 of 2021. ARPU, which is average revenue per paying user, is also flat to declining, which are worrying signs for the segment. Investors are most concerned about the concentration risks at Garena, given that revenues are almost entirely dominated by a few top games such as Free Fire. Garena launched an upgraded version of Free Fire called Free Fire Max, and downloads of the new version have increased in October and November of 2021, exceeding that of year-to-date average monthly downloads. Free Fire Max initial response looks promising and is the top 10 grossing ranking in terms of 34 and 30 countries on iOS and Android respectively. I believe that while Free Fire may make Garena look like a one-trick pony, I think we could be surprised on the upside if Garena launches a new game in the near future that investors are not expecting. Now let's turn our progress to the digital financial services arm. According to the e-commerce report by Temasek, digital financial services are critical enablers. The majority of merchants who use digital financial services intends to continue and even increase usage over the next 1 to 2 years, especially when it comes to digital payments. According to reports, Shopee has actually achieved a large market share in Indonesia, which is its largest market by being price offensive. However, we see that competition is still intense, and we can probably expect to see much more cash burn from this segment moving forward. Lastly, let's look at the valuation of the company. For the gaming segment, the company guided to gaming segment bookings of 4.5 billion to 4.7 billion in its latest disclosure, and taking the midpoint of that, I have arrived at adjusted revenue of 4.6 billion for 2021. For 2022, I think to be conservative, we could even expect flattish revenue growth, but to give them the benefit of doubt, I have priced in a 10% growth in adjusted revenue to get somewhat around a 5.1 billion in adjusted revenue. I've assumed that margins remain constant from that of 2020, and with that, we have arrived at an adjusted EBITDA of around 3.2 billion in 2022. I think the margin assumptions are already very generous because margins are actually only high for self-developed games like Free Fire. Hence, this is actually implying the continued popularity of Free Fire or the launch of new self-developed games. Applying a multiple of 15 times to that based on the average of peers in US and Asia, I get a valuation of the segment around 47 billion. I believe that no higher multiple is probably reasonable due to concentration risk in this segment. For the e-commerce segment, I'm expecting a 25% growth in 2022 in GMV, which is already very generous given the report expects sub 20% growth rates. Reports have shown that sellers are willing to increase take rates by around 0.5 to 1%, hence I've priced in an increase in take rates of 0.75% per year in 2021 and 2022. This gives me an adjusted revenue of around 6.6 billion in 2022, and to that I've applied an EV over sales multiple of 6 times, which is that based on Melly, to reach a 40 billion valuation. Do note that because of the operating scenario similarity between Sea Limited as well as Mercado Libre, this multiple is much higher to that compared to more developed e-commerce markets like US as well as China. Putting it together, we derived a fair value range of $149 to $194 in my SOTP. I've taken into account the 11 million new shares and 2.5 billion convertible bonds issued in my bridge from the enterprise value to the implied fair value of equity. I've also ascribed no value for the fintech segment yet because the segment is not profitable yet, and if we're ascribing a value there, we have to account for the cash burn which is needed until the segment breaks even. With these numbers in mind, I'm hoping to initiate a position in the stock around $170 and below for a margin of safety. So that's all for today. If you enjoyed this, remember to subscribe, like the video, and leave a comment in the section below.